every Monday to Friday. This is Peter Lewis's Money Talk.
Money Talk.
Good morning, this is Peter Lewis, welcoming you to Money Talk for Thursday the 27th of June as we head towards a long holiday weekend here in Hong Kong. More on that later. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 50 million customers across 10 countries. In today's business and finance headlines, Australian inflation exceeded expectations in May, complicating the path to rate cuts for the country's central bank. The consumer price index rose to 4%. The increase was higher than the 3.8% anticipated by market analysts and accelerated from the 3.6% seen in the previous month. German car-making giant Volkswagen says it will invest up to $5 billion in Tesla rival Rivian. The investment is part of a new joint venture to share EV architecture and software technology. Initially, VW will provide $1 billion to Rivian via an unsecured convertible note, which will later convert into Rivian's common stock, subject to certain conditions. Volkswagen is expected to invest an additional $4 billion as part of the transaction. The Japanese yen fell to a 38-year low on Wednesday, prompting speculation that officials might again be forced to step in to support the ailing currency. The yen slipped 0.7% against the dollar to 160.81 on Wednesday, past the level it reached in late April when Japan's finance ministry spent a record $62 billion to try and boost the currency. The yen's fallen 14% against the dollar this year, and in response to the latest leg lower, Japan's top currency official Masato Kanda told reporters that the government was seriously concerned about the yen's decline and would respond to any excessive moves. And the offshore yuan depreciated past 7.3 renminbi per dollar, reaching its lowest level in over 7 months, partly due to weak guidance from the central bank and the stronger US dollar. The People's Bank of China set the midpoint range at 7.1248 per dollar, its weakest since November, suggesting that the PBOC might be allowing a gradual weakening of the yuan. Joining me to discuss some of those stories in more depth are Andrew Freris, the CEO of Ecognosis Advisory, and Michelle Lam, Greater China Economist at Societe Generale Corporate and Investment Banking. With a view from Taiwan is Ross Feingold, Director of Research at Caerus Consulting in Taipei, and providing our regular weekly update from the UK on the British general election is Richard Harris, Chief Executive Officer at Port Shelter Investment Management. Don't forget to take a look at my Asian daily newsletter, which has more business and finance information from around the region, and you'll find that at peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
On Wall Street Wednesday, the three major indices edged higher. The Nasdaq led the way, rallying for a second day to finish 0.5% higher at 17,805, boosted by a jump in shares of tech giants. The S&P 500 added 0.2% to 5,478. And the Dow edged up 16 points, under 0.1%, to 39,128. The Nasdaq set for an 18.4% first half gain because of a big run in Nvidia, and after trading lower for much of the day, Nvidia closed up 0.3%, extending Tuesday's 7% climb, and the AI chip maker has surged 150% so far in 2024, taking its market value to $3.1 trillion. Amazon's market value crossed the $2 trillion mark on Wednesday, making it the fifth of a handful of big tech groups to have surpassed that threshold. Shares in the Seattle-based company climbed 3.9%, pushing up its market capitalization to $2.015 trillion. Treasury bonds fell in price, boosting the 10-year Treasury yield to 4.33%. The 2-year yield was unchanged at 4.75%. Trading was cautious with the countdown to the release of US inflation data tomorrow. There were big swings in the currency markets Wednesday, as you heard earlier. The US dollar index, which tracks the value of the dollar against a basket of 6 currencies, rose 0.4% to just above 106, and the dollar index is up 4.6% in 2024. Gold suffered at the hands of the strong dollar, with spot prices down 0.9% to $2,298 an ounce. And Brent crude oil settled 0.33% higher at $85.26 a barrel. Bitcoin faded back from $62,000, ending the day 1.6% lower at $60,950. And Chinese stocks in Hong Kong and on mainland bourses were slightly higher Wednesday. The Hang Seng was up 17 points. That's 0.1% at 18,090. And the city's benchmark has fallen more than 8% from this year's high in May. And for 2024 year to date, the index is up 6.1%. On the mainland, the Shanghai Composite climbed 0.8% to 2,973, rebounding from 4-month lows. For 2024 so far, the index is almost unchanged, and traders are awaiting Chinese industrial profits data for the first 5 months of the year, which will be due later this morning. And the Hang Seng futures pointing to a decline of about 170 points at the open. Looks like the index is going to start trading around about 17,920. You can get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Big welcome to our Thursday guests. We have with us Andrew Freris, the CEO of Ecognosis Advisory. Morning, Andrew.
Good morning, Peter.
And also with us, Michelle Lam, who is Greater China Economist at Societe Generale Corporate and Investment Banking. Morning, Michelle.
Good morning.
Now, there were big swings, as you heard there in the headlines, in the currency markets yesterday. The US dollar index, which tracks the value of the dollar against a basket of 6 currencies. And in case you're wondering what those 6 are, it's the euro, the yen, the British pound, the Canadian dollar, the Swedish krona and the Swiss franc. The dollar index rose 0.4% against that basket to just above 106. The dollar index is up 4.6% in 2024, although it still sits about 7% below the record high it reached in September 2022. But the ongoing strength of the dollar is causing problems for other major currencies. The finance ministers of South Korea and Japan agreed to cooperate on stabilising their weak currencies during a bilateral meeting on Tuesday. And the Japanese yen, as you held in the headlines, fell to a 38-year low on Wednesday, prompting speculation that officials might be forced to step in. Andrew, when I hear about the weak yen, I'm reminded of what currency traders used to say way back in the day in the FX markets. They used to say, buy dollars, wear diamonds. That springs to mind. I mean, this is just as much a strong dollar story, isn't it?
Yeah, and actually, I would like to turn this on its head and look at Japan, where, there is a lot of gnashing of teeth and tearing of clothes. It is, again, I'm absolutely amazed at the inability, or at least commentators, to get something very basically right. This is 101 economics. Look, the Japanese are controlling their interest rates, correct? They just raised it about a month ago, okay? And they are refusing to increase it further, despite the fact that inflation is not really decelerating, and they're worried about their GDP. Now, if you fix your interest rates, you cannot control your exchange rate. Terribly simple. So I don't know what's their problem. The yen is weak. Yeah, all right, increase your interest rates, and you're going to find out that the yen strengthens. They can't have it both ways. This is absolutely amazing. It is basically childish. So much so that, as you are asking me to say, what comment can I make? Nothing. There is a differential between Japanese and American interest rates. And the Japanese interest rates are not closing the gap. Hence, yen is weaker. Ta-da! Really?
Can you see anything? I mean, let me ask you this. Can you see anything that could change the strong dollar story at the moment, given that the Fed doesn't seem to want to cut interest rates? We've had more officials come out this week saying the time is not right to do it. So it seems that there's really nothing stopping the dollar from just marching further ahead, is there? Or can you see anything on the horizon that could do that?
Yes, my dear friend Peter, 101 economics. Anybody that complains about their exchange rates and at the same time keeps their fingers on the bottom on interest rates, they can't complain. If countries don't like the exchange rates versus the US dollar, let them raise the interest rates. Terribly simple.
Well, the Japanese, though, seem to want to do it by intervention. First of all, verbal intervention, and then physical intervention. Does this work? Is it any good use?
Well, they can, of course, use their foreign exchange reserves, but the foreign exchange reserves are not infinite, and as long as the differentials stay, they will carry on, pouring buckets of water down an empty hole. No, I go back to that. Is there anything to stop the US dollar from getting stronger? Yes, higher interest rates anywhere in the world. And if, in inverted commas, countries don't want to do it, don't complain. You're going to get a stronger dollar. End of story.
All right, well, let's bring in Michelle. Michelle, and let's get your thoughts on this, because it's having an impact across Asia, isn't it? Not just Japan, but also the Chinese yuan, the Indonesian rupiah, the Philippine peso, all sliding. What can be done about it?
Really, the main driver for the weakness that we've seen in the Asian currencies is the interest rate differential, which actually you would think that the current account surplus that some of the countries have, like Korea, China, there's actually a huge surplus, but that's actually not really doing any favor for the currency, because the FX market really right now, the main driver is the interest rate differential. So I think unless we see the Fed starting to cut interest rates, probably maybe sometime later this year or maybe 2025, then we're going to see the strength in the US dollar reverse. But I think for the case of the Japanese yen, I mean, even if, of course, there are some market chatters that the BOJ could be raising the interest rate as soon as July again. We think that it's more likely that they would do it later this year in September rather than next month. But even if they do it, I mean, the interest rate differential is still huge between the US and Japan. So it's actually not going to be extremely favorable for the Japanese yen. So I think unless we see material interest rates cuts by the Fed, the weak Japanese yen story is here to stay. Which means that there's going to be inflationary pressures for Japan, and that's really putting a lot of downward pressure on the real household income.
But even if the Fed does start cutting rates, let's suppose it cuts a couple of times this year, it's still going to leave US rates way above Japanese rates. So even then, it's probably not going to help, is it?
Yeah, that's right.
So what could change? What could change the strong dollar story? Is there anything at all that, because at the moment, the dollar's got the wind behind it, isn't it? And it just seems to be going from strength to strength, and it's hard to see anything fundamental that would go and change that.
Well, I think for the strong dollar, you also look at not just the Japanese yen, right? You also have the euro, the other major currencies, and in particular euro. I think recently there's also some maybe uncertainty around the French election that has somewhat weight on the euro. But I think that if we see more evidence that the CPI in the US could be moderating, and that could maybe somewhat be supportive to the euro, and actually I think probably not a story for second half of this year, but for 2025, I would think that the strong dollar story is going to reverse a bit.
Could this force central banks in Asia to maybe raise rates? We've already seen Indonesia have to do it, didn't they, to try and support their currency, which is, if they are, it's going to be pretty disastrous, isn't it?
I think among the major central banks, the only ones that maybe have a probability to raise rates is maybe the RBA. As you mentioned yesterday, the CPI print was somewhat a surprise to the upside, and we've also heard comments from the RBA meeting last week that seems to be pretty hawkish. So I think that is one potential, but that's really for the reason of the inflation in the domestic economy, not the FX. And the other one I think could be doing a rate hike is the Central Bank of Taiwan, because again, we've seen a pretty strong stock market and housing market, given the rapid semiconductor export growth and industrial production growth. So I think the CBC could also be maybe thinking about a rate hike possibly at some point this year. But other than that, I think most Asian central banks will not be embarking another rate hikes any further.
Andrew, I mean, we talked about the intervention, the Japanese officials talking about intervening again. They spent, I'd like to say, wasted $60 billion just a couple of weeks ago trying to support the currency. What about if central banks were to get together? We've had talk of, the Bank of Korea and the Bank of Japan maybe coordinating something. Would that work if we got some of the central banks together to try and support these currencies?
No, because as long as the holders of US dollars and Asian currencies are fairly certain that the differential will exist, will continue to be there, and they will continue to sell their currencies and buy US dollars. Very simple. The intervention will have to be, remember, for intervention to work, and that's another pathetic 101 precept that it is so clear and so obvious and just it's not understood. It is a kind of a one-off. So you go in and you sell. For the price to come down permanently, you have to sell every day. Okay, I mean, whatever it is. And of course, this can only be done over a short period of time. So intervention, okay, might make some sense if, let's say, I don't know, North Korea invaded South Korea and it's going to finish very quickly in a short war. And it's a pathetic example, but it's a one-off event. Good. Then intervention may make some sense. But now, given that there is something that we all know, American interest rates are not going to move till well Christmas pass, okay, and therefore everybody else is not moving their interest rates, then the US dollar continues to strengthen. So they can get together all they want, okay, effectively they will be wasting their money.
So this is really all this intervention that Japan is talking about, both the verbal jawboning and the actual intervention that we think we saw a couple of weeks ago. It's all a waste of time, and it's just a waste of Japan's currency reserves then.
Also, we always thought that weak currencies are very good for exports. So, I would clear my throat and tell the Japanese, why are you complaining? Your exports more than ever are now competitive in United States, or potentially, if I take the cross differentials with China, for example, or with South Korea, I would suspect that the yen has relatively weakened against both those currencies, although all those currencies weakened against the US dollar.
But the problem is imports are soaring as well, aren't they? The cost of imports. So Japan's imported inflation is wiping out all those wage gains.
In which case, I would tell Japan that since until quite recently, their obsession was to have higher inflation. Remember, Peter, 3 months ago, the Japanese authorities got together, the trade unions, and they forced all of them to increase wages as much as 6 or 7%, unheard numbers in the Japanese economy. Okay, why they did that? Because they wanted higher inflation. Make up your mind. I mean, I'm not referring to you. Again, I'm saying that in a rhetorical sense to the Japanese authorities. They can't have higher inflation and at the same time they're going to have a very strong exchange rate. That doesn't make any sense. But a weak exchange rate can help for a higher inflation. But apparently now they don't want higher inflation. Well, if things change, again, then they will have to change their policies.
Michelle, let me ask you about the yuan. The offshore yuan depreciated past 7.30 renminbi per dollar yesterday, so it's taken that to the lowest level in over 7 months. That was helped by weak guidance from the PBOC. The PBOC set the midpoint range at 7.1248 per dollar. That's its weakest since November. Begs a lot of questions here. First of all, is the PBOC trying to guide the yuan lower?
I think that is the case against the US dollar because we've seen the dollar getting stronger again. Look at what's happening to the yen and the euro. So I think there's actually, if they want to maintain a stability in terms of the trade rate basket, there's actually some room for the CNY to weaken a bit against the US dollar. And the other factor, I think, is also they have been very fixated on maintaining a stable US DCNY currency. And we know that we're going to have the US election at some point late next year. And first of all, ahead of the US election, there's tend to be a bit dollar positive period. And second is that the outcome could be bringing more downward pressure on the CNY if we see that actually Donald Trump could be imposing some tariff measures on Chinese imports. So I think there's also probably they're finding a timing to relieve some of the depreciation pressure on the CNY. So probably they're doing it right now.
And what is the impact on the Chinese economy of the weak yuan?
I don't think there's going to be material impact because we're talking about very gradual depreciation, unlike what we see in the yen in the recent periods. So. And also probably normally a weaker yuan tend to be supportive of exports, but right now, even though China's exports has been doing very well since the start of the year, they are now getting a lot of protectionist measures, like things tariffs on the EV sectors, for example. So I think probably there's not going to be material impacts on the economy.
Is it having an impact on monetary policy in the sense that it's making the PBOC reluctant to cut interest rates? A lot of people would like to see a cut in rates. Is it having an impact because the PBOC doesn't want to see the yuan slide even further and have capital outflows? Or is it just ignoring that?
I think that's definitely the case, and that's also the reason why we've seen the PBOC has been doing very little compared to the state of the economy, actually. But on the other hand, when it comes to the monetary policy, the PBOC also seems to be sending a message that they don't want to do big bang stimulus. If you listen to what the PBOC Governor Pan mentioned on the Shanghai Lujiazhou Forum, I think last week, I think that is the message that he's going to send. We know that the credit growth, the money growth in China has been decelerating, but he's also placing a lot of emphasis on the credit quality, which I think actually makes a lot of sense, because if you have the property sector and the local government sector that are doing the debt deleveraging, then you could not really force the overall credit number to be going up very strongly like what you see in the past. And in terms of monetary policy, the PBOC has also been doing a lot of targeted easing. For example, they did not cut the headline interest rates earlier this year, but they lowered the LPR, and they've also removed the floor of the mortgage interest rate. So it's actually de facto an interest rate cuts. So if you look at the headline policy rates, that's the 7-day reverse repo rate. They have not moved a lot, but I think behind that, actually, there have been a lot of easing measures that have been done by the PBOC.
All right. Well, let's talk a bit more about the Chinese economy, because we're coming up to the end of the first half of the year. So I want to get both your thoughts on where we are in China and also the outlook going forward. I mean, Andrew, Premier Li was speaking at the Summer Davos earlier this week. He was quite optimistic about the Chinese economy. He said it's got off to a good start this year. They're going to carry on creating technological innovation, which was going to boost the economy further. He's pretty confident that they're going to achieve their growth target of 5% for this year. So what's your thoughts?
My thought is the following. First, a very simple thought. It looks as if the Chinese economy has hit a fantastic spot globally, in the sense that it has a reasonably high GDP growth. And even if they don't manage 5%, which I think it is doable, they would still have one of the highest GDP growth rates amongst the G20. Okay, and they have zero inflation. What's their problem? Oh, this is the big question. What is their problem? Their problem is a huge ailing property sector that just simply will not go away. And because of that, you have a relatively, let's say, uncertain consumer behavior, precisely because the prices of property in China continue to fall for nearly 2 years now. And the authorities have approached the issue carefully, conservatively, again, in a very conservative manner. I can't possibly judge them on that, but it still is there. So, if I was invited to Davos, I would say, you guys are doing great. I wish everybody else, like the United States or the European Union, had a 5% growth with zero inflation. They would be laughing. You are having this. Okay, but unfortunately, there is the property sector. And what can they do about it? There are 101 of different things they can do about this. But the PBOC is very reluctant to change interest rates. In other words, to use interest rates. And there is a very good reason for that. It isn't that traditionally they prefer to use either reserve requirements, okay, or to simply use verbal requests from the banks to expand their credit. And that is when you have a CPI inflation of nearly zero and you have 2.5% to 3% interest rates. Okay, therefore you have real interest rates of 2 or 3%. In other words, nominal interest rates minus zero inflation. If you want to lower, okay, those real interest rates, you have to do quite a lot of very hard work. In other words, you end up having negative real interest rates at the end if you go to the other extreme. Hence, I can't blame the Chinese authorities for doing that. How much can they cost they drop their interest rates. If you have a 2.5 or 3% interest rate, if you cut it by 200 basis points, you effectively, you're beginning to move very, very near negative real interest rates, which is really absurd, and very distorting in the economy. So they're doing very nicely by the property sector.
All right, Michelle, let's get your thoughts then on, first of all, where we are in the Chinese economy so far. What's your report card like for China?
So the first quarter was actually pretty good because the exports were recovering very strongly. But I think going into second half, it seems like even though the export momentum continues, the recovery in the consumption actually stalled. And if you look at investments, the infrastructure investment, actually the momentum was pretty weak, even though the government has been issuing a lot of special CGBs and then special LGBs. They just do not pick up very quickly. And in terms of the property sector, the picture is still the one that is like things are just continuing to decline. And I think you look at the prices momentum, there seems to be an acceleration in the decline as well going into May. So definitely it is overall a picture of a very strong external demand, but domestic demand, the consumption is weak, as we've always been seeing. And even the investments front, I think the government needs to actually step up the stimulus a little bit to make sure that they can get to 5% this year.
And we've seen credit growth. Credit contraction at the moment, isn't it? As the head of the PBOC was pointing out in Shanghai, that we're not going to see the sort of levels of credit growth that we've seen in the past. But can the economy keep on growing when there's no credit growth at all, or credit contraction?
Yeah, that is the concern, especially the weakness in the credit. I think is driven by the household sector, which some of the consumers, I think they're probably repaying the mortgage debt because they don't see any good use of the money and they don't want to spend the money. So why not just pay down the debts? And then one point maybe I want to highlight from the yesterday's meeting is that the speech by Premier Li also sent somewhat a message to the markets that actually we should not be expecting any big bang stimulus because the government probably just judges that the economic situation is doing pretty all right, and there's also no use to stimulate the economy dramatically. So, which I think this is the reason also why we saw the government bond yields in China actually trending even lower yesterday, even though the PBOC has been warning that it is too low.
I mean, the government does offer stimulus in some ways, but it's all to the supply side, doesn't it? It doesn't seem to have any stimulus for the consumer.
Yeah, that has always been the things that we've been highlighting, that the supply side policies, the policymakers have been focusing too much on that, and we need to switch the focus to the demand side, especially on consumption. So we will see if we have any indication that the policymakers are thinking this way in the third plenum. Probably we will get some maybe more emphasis on how to increase the social welfare through some fiscal reform measures. But let's see what's going to be announced next month.
And Andrew, going forward, it looks like from listening to Premier Li at the summit Davos that there's not going to be any backing down on the putting more resources into green energy and electric vehicles and batteries and so on, which, as we know, is a source of big tension with the EU and the US. But it does look like, although they're talking now with the EU, it doesn't look like there's really much room for compromise.
Correct, and there's going to be even less room for compromise if Trump gets elected, which may very well be the case. So I'm not quite sure, Peter, if there is a question there. In other words, is there something that the Chinese can do as far as their exports are concerned? The answer is very little. They cannot voluntarily restrict them, but they're going to find out that at least some of them are restricted by tariffs. Now, I think I've said that in the last time we were talking. Tariffs on electric vehicles is really irrelevant in the overall scheme of things of China's exports. Okay, that runs to a couple of trillion, and overall exports of electrical vehicles was something like 40 billion. In other words, it is a small amount. And not all electric vehicles are going to the United States and the European Union, the two places where they are very likely, as actually the European Union, they are already being hit with increases in tariffs. Never mind the fact that Trump continues to threaten a 60% right across the board tariffs on all imports into China, from China. Yeah.
Do you think we got the presidential debates tonight, haven't we, between Joe Biden and Donald Trump? Do you think the markets have properly priced in the economic consequences of Donald Trump's policies? Because they're getting more and more extreme, aren't they? He's talking about now replacing income tax altogether with tariffs.
Well, I'll tell you something which is not very flattering towards me, but in the last month I have written twice about the consequences of Trump being elected, and I got a stunned reaction from my clients. I was, yeah, all right, wait to appreciate. The guy is threatening to put 10% tariffs on everybody and 60% tariffs on China, and I think he can do it. I think there is nothing to stop him from doing it. And, well, that's the way it is. Let's see what goes on. There are a lot of things to buy if Trump gets elected, and also a hell of a lot of things that they will not be even considering buying. Okay, but he's going to be incredibly bad for the climate and therefore very good for fossil fuels, and the list goes on. Yeah, the answer is no, the markets haven't sat carefully to find out what they should be buying right now. And that's going to happen very quickly. And, well, all right, I think I'll stop on that one.
All right, well, let's have the final word from Michelle. I mean, going forward, Michelle, we've still got, haven't we, all these geopolitical tensions, threats of tariffs from both the EU and the US as well, and maybe even more if Donald Trump gets elected. Is that going to be a drag on the Chinese economy going forward, and what sort of impact is it going to have?
Yeah, I think 60% tariff from the U.S. will definitely be disastrous for China's exports. But let's see. I think some political analysts, as I speak with, also see that probably it's not going to be as dramatic as that. As probably he's trying to get some kind of a deal with this 60% on the table. So also the U.S. has a serious inflation problem right now. So is he really going to have a 60% tariff on all the goods that I think maybe this is going to be implemented in phase. I think if that really is going to happen. But I think markets probably haven't priced in this scenario.
What, is it going to have an impact on the overall Chinese economy?
Yeah, I think so. That will be a great confidence shock and also a material shock on the exports. But on the other hand, China has also been relying less on the U.S. demand after the U.S.-China trade war. And right now, I think dealing with this tariff issue, the Chinese firms are also busily investing in a lot of investment sites outside China. So, for example, I think this week I saw the news that the Chinese government is discussing with Malaysian government to make sure that the products will not be subject to tariffs if they build some investment sites in Malaysia. So I think this kind of over direct investments from China is going to pick up in light of this trend of rising protectionism.
Okay, well, thank you both very much indeed. Great to hear your thoughts this morning. That's Michelle Lam, who is Greater China Economist at Societe Generale Corporate and Investment Banking, and Andrew Freris, who is the CEO of Ecognosis Advisory.
Peter Lewis's Money Talk.
I'm joined now by Ross Feingold, who is Director of Research at Caerus Consulting over in Taiwan. Morning, Ross.
Good morning.
Now, the first debate of the 2024 US presidential election is going to take place tonight. President Joe Biden and former President Donald Trump will slog it out in a 2020 rematch. Ross, what should we be looking out for from this tonight?
I'll be looking for whether or not the candidates actually get a chance to talk about real public policy issues. The expectation is that Trump will attack Biden over Biden's son, Hunter, with all his legal troubles, and Biden might attack Trump over Trump's legal troubles. So how much time is that going to leave to talk about the substantive issues that are of concern to the American voter? Economy, of course, is always top of the list. Immigration, which is something that Trump, at least according to polling, the voters think Trump could do a better job on immigration than Biden can. So you would think that Trump would not lose the opportunity to bring that up and to further stake out his claim to be the better president when it comes to that issue. I doubt foreign policy will come up too much, despite all the talk about China. Typically, foreign policy is not the top of the agenda for voters or very relevant in situations like a debate.
And do you think what we would like to see is maybe more on the economy, and in particular, the economic impact of Donald Trump's tax and trade plans? I mean, he's talking about now replacing income tax altogether with tariffs. We've had a group of economists just this week get together and say that this could sink the US into a depression if Donald Trump goes forward with some of his economic plans. Do you think we'll see more? This is an opportunity for Joe Biden, isn't it, to maybe put some daylight between himself and Donald Trump and really focus on this?
Yeah, let's hope that they do have a substantive discussion about economic policy. The problem for Biden is as soon as the economy comes up, Trump is going to bring up inflation. Now, maybe it's not all Biden's fault that inflation went up during the years of the pandemic and the post-pandemic period, but that's just the reality. It's a political liability for President Biden that inflation has gone up so much, and the price of goods, shopping and other for daily necessities has become so much more expensive in the United States. So he's definitely vulnerable there. We'll see how Trump plays it, though.
I suppose part of the problem for Joe Biden is that whatever Donald Trump does, he's doing similar things, although I suppose, Donald Trump is getting more extreme with some of the economic policies, but Joe Biden's following him.
The interesting thing there is, Trump, one of his few major legislative achievements was the big tax cut act that passed through Congress at the end of Trump's first year in office in 2017. The taxes were cut, government revenue fell, and Trump wound up borrowing a lot of money as president. So we'll see I'll be curious to see how Biden plays that as well. He's going to probably make the same point that Democrats often make, is that the Republicans cut taxes for the wealthy, and I'm going to raise taxes on the wealthy. So that could be an opportunity for Biden to make score some points if he phrases it well and really describes the tax cuts of Trump era really benefiting just corporations and the wealthy.
And are there issues for us here in Asia that we should be looking out for?
Well, you did mention tariffs, so we'll see if Trump talks about his plan to dramatically further increase tariffs, especially on goods from China, and we'll see if Biden plays along with that or says that that's going to fuel further inflation. So I'll be looking at that, and then again, any general mention of foreign policy or of China if it does come up.
And what about Taiwan? Is that, one of the concerns there is that if Donald Trump returns as president, that he may not be as supportive of Taiwan as Joe Biden has been. Is that a concern over there?
I think the reality on that question is, even though people say Trump is an isolationist, the fact is that his team of his foreign policy and national security team, should he be elected, is going to include a lot of very pro-Taiwan people and a lot of people who are very, very hawkish when it comes to China policy. So we have to separate what Trump says, and part of that is just the rhetoric, and then what he will actually do. And I think the Trump team would be very tough on China. They would be very pro-Taiwan. So the reality here is I think the government here in Taiwan is actually rooting for Trump to win.
And are we going to see people like Robert Lighthizer back in the administration? He's also very hawkish, isn't he, when it comes to China and trade with China?
I think it's very likely it's going to be people like that, like Robert O'Brien, who's the national security advisor in the final years of the Trump administration. And again, as I said, these people are very tough on China. They're very pro-Taiwan. And yeah, I think a lot of those people would be coming back into Trump 2.0.
Is their age going to come up? They're both sort of like, around the 80 level, aren't they? Is this going to be an issue in the election?
I would expect the moderators to bring it up. It's certainly a fair game to ask questions about that, about their energy levels and about their ability to see through the next 4 years, especially since they are both over or approaching 80, it appears that Biden has more of a liability on that because simply he appears increasingly elderly. That's just the fact. And Trump still appears to be as energetic as somebody much younger than his 78 years. But yeah, I would expect the moderators to bring that up if the candidates don't bring it up themselves.
I'm always surprised. I mean, people talk about Biden's age and the fact that he does look elderly, but if you listen to some of the Trump speeches, not just the edited highlights, but listen to them, in full, when he's in front of a crowd, he meanders and rambles and goes off track and sounds confused quite a lot. So I'm wondering if that might come up in the debates where the format doesn't really suit him, does it? Because there's no audience at all. He's just got to talk. We'll be able to see, live just how he manages through that.
Yeah, that's a great point. Trump does feed off of the audiences. He could just use some rhetorical jabs at Biden or the Democrats, and he gets a big cheer from the crowd. And he's not going to have that on Thursday night at the debate.
Okay, well, we've got another election coming up as well. Over the weekend, the first round of the French parliamentary election. Sorry, it's not about Emmanuel Macron. The president won't change, but the composition of parliaments certainly could. This is obviously causing a lot of angst as well, not just in France, but all over the world. What is going to be the significance of this election?
Well, the concern is how well the far right will do, and if they do well enough to possibly form a government, and that would just confirm what's going on in several countries on the European continent, which is that the right is ascended. People are concerned about the free movement of people and immigration, and that this is just a winning issue for the right, and it's a losing issue for traditional conservative or progressive politicians or political parties in Europe. And then if the right does take a majority of seats, they'll get to form the government, and then they'll have what in France they call cohabitation, where the president and the prime minister come from different parties. It'll make the remaining lame duck years of Macron extremely difficult for him to push through any legislative agenda through the parliament.
Well, we've had years of cohabitation before, but never one that involves an extreme right-wing party. So this is presumably going to be something new for France that they may have to deal with.
Yeah, I think they would take issue with something you just said, though, that they're the extreme right. They've tried to repackage or prepackage themselves to be the soft and cuddly right, with their party leader who's young and telegenic and looks good on TV or in social media clips. So I think they reject the word extreme, and they also would say, look, if we do win, then you can't call us extreme. We're representing a plurality or a majority opinion of the French voter, and just like in the United States and other countries in Europe, we shouldn't underestimate the power of this immigration issue, and perhaps even more so in Europe than in the United States.
Is it anything to be afraid of? Let's suppose Marine Le Pen does win. Are people getting overcautious or over worried about it? Because if you look at Italy, you have a far-right government there, a far-right leader anyway, but she's actually governed in a fairly moderate way. Her policies, particularly her economic policies, have been fairly centrist.
It really depends on the issue. Prime Minister Meloni, she's sort of moved a bit to the center on economic policy as well as on foreign policy. She's been part of the Western team when it comes to Ukraine, for example, and there were concerns that she was going to be pro-Russia. But on social policy issues, I mean, she has stuck to extremely conservative views. So we'll see what happens in France. France generally, society is fairly progressive on most social policy issues, and if the right does get to form the government, we'll just have to watch. Where do they manifest their roots as a far right party? Is it just on immigration, or would it be on other issues as well?
And finally, let's get some thoughts on one other election that's coming up. We're into the final week now of campaigning in the UK general election. It looks like the ruling Conservative Party, if you believe the polls, are going to get turfed out and are going to lose by a landslide. There could be a huge majority for the Labour government. What are the consequences of that going to be?
Well, that's up to you. How many times? When you're going to go back to the UK soon, and you'll be voting. You know what we say in America: vote early and vote often. If you want to save the Conservatives, you'd have to vote often, I suppose, because as you said, the polls are indicating it's going to be a complete wipeout for the Conservatives. I'll tell you who would be the happiest guy in the world if Labour gets to form the government. That's going to be President Biden. That he'd finally have a left of center government in the UK that he could deal with on a range of public policy issues. But it's just not unusual in any democracy when a party has ruled as long as the Conservatives have ruled in the UK that over time the voters tire of the ruling party. They want to make a change. And we also have to keep in mind that at this point, the UK or the Conservative Party leadership, their ministerial lineup, this is not, I wouldn't even call it like the B team or the C team. It's more like the F team, F for failure. They've been in the office so long, eventually it gets harder to find people to fill all those important jobs. You're going to have to fill them with not necessarily the best people, which you might in your first term. So the public is very frustrated with Conservative leadership, and it does look like, as I said, it looks like it's going to be a wipeout, and there's going to be a new government led by Labour.
Ross, thank you very much indeed for your comments this morning. That's Ross Feingold, who is Director of Research at Caerus Consulting over in Taiwan. I'm joined now by Dr. Richard Harris, who is Chief Executive Officer at Port Shelter Investment Management, who is over in the UK, regularly updating us on what's happening on the UK election front. Morning, Richard.
Morning, Peter.
Well, since we last spoke, the hole that the Conservative Party is in seems to have got bigger and bigger. They're getting caught up now in a betting scandal of all things, and maybe not just the Conservative Party.
Well, it's wonderful entertainment for all the rest of it. I mean, just to update your listeners, basically what happened was it seems that there was an enormous increase the day before the secret date of the election was actually announced in betting on that particular day. And when I say an enormous increase, you can actually get this data off the internet. And it was just a huge increase of betting on that day. And it turns out the number of people who had been betting are not only staff around the Prime Minister, but also MPs with connections to the Prime Minister. Now, both the police and what they call the betting commission are looking into it. But if those of us in finance, we liken this to an insider trading scandal. A piece of news, you put your money on the bet, the bet goes up and you collect your winnings. But, it's good that these people have been found out. But it's, a little bit too late in the day for any real action to be taken. Once a candidate to become MP is chosen for constituency, you can't take them off the ballot sheet. So there are 2 or 3 Conservative MPs who are basically being disowned by the party, but they could still be elected.
But now that they are on their own, there's 2 of them that have been basically disowned by the Conservative Party. If they were to win, presumably they would then become independents in the House of Parliament.
Yes, they would, because nobody would take them on, of course. The interesting thing, of course, is whether then the charges would be pressed against them, because what they've done is illegal. And if they were convicted, of course, as members of Parliament with convictions, then they would have to leave Parliament. So the whole thing is very, very messy, and it's just put the Conservatives in a terrible light because, the volunteers, the people who keep these parties going are all volunteers. They put their time and their effort in, often almost timeless. And to have people behaving like this right to the center of power, that you are looking to put them into power, enriching themselves on inside information, has just gone down very, very badly.
When we look at this from overseas, you feel absolutely incredulous about what's going on there. But it is a serious matter, isn't it? And I presume there are some big implications from this scandal.
Well, there are, certainly in terms of credibility of the party. I mean, I think what we have to remember is that the press and even individual investigators are very, very active in UK politics. So any little smell like this is going to be brought up. The extraordinary thing is, in fact, the amount of money for risking your career would have been very small. And at the end of the day, it doesn't really make much of an impact broadly to what's happening, because the Conservative Party is already in a very difficult situation. But it does provide an enormous amount of entertainment for the rest of us, especially as the other party, Labour, have been caught up in it as well. And as you may have heard, Labour have suspended a candidate who actually bet against himself.
It's quite astonishing, isn't it, really? So all the parties have now released their manifesto. They're all making big promises about spending that they're going to do and tax cuts that they're going to make. But the Institute of Fiscal Studies, which analyses these manifestos and costs up the plans, is really totally unimpressed, isn't it? It doesn't seem like any of the parties have really costed their policies properly.
Well, I think this is one of the issues that we've seen in this election, is that since I can remember, British elections have been voted on policy, left versus right, welfare state against much more of a free market. Those are easy boxes for people to fall into. It's totally different now. The parties are basically doing the same thing, which is, we'll give you more money. Don't worry, we've costed it. Your taxes aren't going to go up. And this is the key policy for all of the parties at the moment. Now, the Greens are saying, we're going to increase your taxes a lot, but we'll give you a lot back. But they're not really going to get anywhere. But the two main parties are basically saying, no, we're going to give you money here, or we're going to give you money there. There's very little they can play with. And really what the IFS have highlighted is the fact that most of these are really election giveaways. We'll do this, we'll do that. There's no real guarantee that this is going to happen.
And none of the parties have really faced up to some of the really difficult economic questions that have got to be answered about the country's future, because productivity growth in the UK since the financial crisis is virtually zero. Economic growth is stagnant. There's got to be some real big reforms and some new thinking, hasn't there, about how to revitalise the economy, but none of them seem to be facing up to that.
Well, I think the problems in many ways are just too difficult now. Do you fix the roads and spend money on the roads, and then the papers jump up and down and say, well, we've got somebody in some small town in the UK who's dying because they can't get health treatment. And then on the other hand, you have, well, our children aren't doing very well in schools, so we need more money for schools. So it's extremely difficult. And I think one of the problems is that certainly developed countries have become so regulated now that there's a huge burden of people who check on people, who check on people, who check on people. And it's very difficult. They all have their own agendas. It's very difficult to move away from that. And I think at the moment, we sort of should feel fairly privileged in Asia that we haven't got to the stage that regulation is so tight that it's starting to restrict the efficiency of many of these services that are provided.
And there's been another sort of scandal as well, hasn't there, involving Nigel Farage, not surprisingly, the leader of the Reform Party. He says that Europe is to blame for the war in Ukraine.
Yes, that's a bit of a curveball, because normally you would expect him not to do that. One does worry quite a lot when people do take this kind of view that, oh no, we're to blame for a war somewhere else. I mean, first of all, Britain is a long way away. Secondly, you have to wonder if Farage, who wants to increase defence expenditure, is going to start making the decisions. Is he going to put more rockets facing Russia, or is he going to put more rockets facing France? And because he hates Europe so much, you have to think he's going to be soft on the bullies and hard on the friends, So it's getting to be difficult to see what side he's on. But also, there's a concern, democratic concern, because he's just announced that he's suing the Daily Mail, which is the popularist right-wing newspaper here, because they've criticised some of these policies. So when you have a politician who wants to sue a newspaper for criticising your policies, you do have to worry about whether they really are truly democratic.
Now, you've been following these campaigns for the last 4 weeks. We're coming into the final week now. The election itself is next Thursday. What do you think of the campaigns?
Well, I think they've been pretty anodyne. Most have been largely the same. They've all followed each other. They've all said, okay, we're going to spend lots more money, but we're not going to tax you. That's been the principal policy. What has really dominated the campaign has been own goals. You know, the classic view of Rishi Sunak announcing the election standing in the rain with rain dripping off his finely tailored suit. The issue with the betting scandal has caused a lot of damage. And in fact, for your finance listeners, there's an even bigger implication of this scandal, which is, of course, the Labour Party were watching these betting figures as they happened as well. And they also saw that the betting started to focus around July the 4th. So they were ready for the election when the Prime Minister's key element is supposed to be surprise. So we're in this situation where I think largely the election campaign has not necessarily been because one's fought a better campaign than the other, but that the Conservatives have had so many own goals.
Now, to remind listeners, you have actually stood as a candidate to be an MP before. Back in 1997, you was the Conservative candidate. There must be a bit of déjà vu at the moment, because in 1997, the Prime Minister at the time was John Major, the leader of the Conservative Party, and he lost the election in a landslide to Tony Blair. Yes. Polls suggest the same thing might happen again this time around, in that Rishi Sunak may well lose the election in a landslide. Why would anyone want to go into politics?
I don't know. I always wanted to be a politician from when I was about 9, but I think I had this idealistic view, that they were strong, independent members of the community with enormous amounts of integrity. And I suppose you have these fantasies when you're about 9. But you're right, I was running in a period for the Conservatives very much like this, when they've been in power a long time. And one of the difficulties that a governing party has is that if things are not going well, you have a track record. And the Conservatives have a very poor track record in health, in education, in infrastructure, in immigration. A lot of the things that Conservative voters feel is the strength of the Conservatives. So we're in a situation now where the Conservative Party I knew is not the Conservative Party of today. And the Labour Party that we all knew as being quite left-wing is very much like the Conservatives today. So I think people are actually really fluctuating. There's a big hint of change in the air. But there are key issues like Brexit has clearly been a massive economic failure. And there's an enormous amount of information to show that the UK economy started to decline from the Brexit vote. There's been corruption over COVID. There's a betting scandal. There's Liz Truss's economic incompetence. So we're in a situation where you cannot defend a track record like that. And the Conservatives are just in a very, very difficult position.
And Brexit has really divided the Conservative Party, hasn't it? Where would you stand on Brexit right now?
Well, it's lucky I didn't get elected, because I wouldn't have lasted the pace. I was always very much, I guess, a globalist, not an isolationist. I was very much in favour of the European elections. The first election I voted in was in 1973, I think, when the UK went into Europe. So I was hardly going to change my mind, 40 years later. And you have to think, why would you reject your largest trading partner? There were all sorts of arguments about sovereignty and stuff like that, but the British had a very, very strong independent position within Europe, and they threw all of those advantages away almost exclusively at the altar of the ambition of a number of politicians, the foremost one being Boris Johnson.
Well, look, your party, the Conservative Party, seems to be about to lose again in a landslide, according to the polls. What is it that's attracting people to the other parties? Because it's not just about a dislike of the Conservatives. You've got to like something else, an alternative.
Well, I think the alternatives have become more acceptable, and the key alternative is the Labour Party. Keir Starmer's done an excellent job in that kind of reform. Last time round, the far left was so left that they made Boris Johnson look good. Now, Labour look very, very electable. The Shadow Chancellor, Rachel Reeves, says a lot of sensible things and has been speaking to business interests much more actively. The other minor parties really don't have much of a hope. The Reform Party doesn't have many policies, and it looks as if, run by Nigel Farage, they're probably going to become really quite far right. The Liberal Democrats, who tend to be centre-left, are nice, but the old comment is, they're nice but a bit dim. So they're not really going to progress much, except on the local side, where they are quite good in local politics. So it's really between Conservatives and Labour.
Well, I've got to finish with a personal question for you, Richard. You've been analysing this whole campaign for us over the last 4 weeks or so. You're a former Conservative candidate to be MP. Who are you going to vote for this time?
Well, it's a very tough one because all of a sudden you've got two parties who are similar. I mean, I'm very much on my side. I'd say I'm pretty hard on economic policies. Who wouldn't be if you come from Hong Kong? But I'm also keen that social services are done properly and that the country just runs. You need your rubbish collected on time. You need to have the trains running on time. You need to have capacity in the hospital. None of this is there because of the track record. There is a real alternative now in Labour. And I have to tell your listeners that after 60 years of really being pretty firmly Conservative, I don't think the Conservatives are Conservative anymore. And it's time to give the other side a chance. So I'm going to be voting Labour. So
this is a shocker. You've been a Conservative all your life, so much so that you've even stood as a Conservative candidate in a previous election, albeit in a very different time, and you're now going to vote Labour.
Yes, and I'm still the same person as I was, which is right of centre, pretty firm on economic policies. And probably a little bit of a technocrat, as we tend to be in Hong Kong. We tend to want to get the job done. And that just isn't being done, not just in the UK, but also in a lot of developed countries as well. People aren't really focusing on the job. I suppose my final cynical comment is the Conservatives have had their snouts in the trough for a long time now. And perhaps it's time for the other side to have a go.
Well, Richard, thank you very much indeed. And we look forward to talking to you next Thursday, which will actually be on election night after the polls have closed, to get an update on how things are going there. That's Dr. Richard Harris, who is the Chief Executive Officer of Port Shelter Investment Management.
You're listening to Peter Lewis's Money Talk.
Money Talk.
And thank you for listening to Money Talk this morning. Do please take a look at my newsletter at peterlewismoneytalk.substack.com for more information on developments during the Asian trading day. Money Talk is going to take a short break for the holiday weekend, so there'll be no show tomorrow or on Monday, which is a public holiday here in Hong Kong for Establishment Day. So this podcast will return on Tuesday, when my guests will be Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, Alex Fu McMillan, a freelance writer and Asia columnist for TheStreet.com, and over in Washington, D.C., our US economics correspondent, writer and broadcaster, Barry Wood. Have a great holiday weekend.
Money Talk.